we have crossed over to the last quarter, and I think this is the most interesting bit of the year. You've seen the index crossing over to 4,600, and I think that momentum is going to be maintained now, because two things are driving the market. One, we're expecting the quarterly results coming through maybe in the next 3 weeks to 4 weeks to come. And then I think most investors are back again to try to square up their position. So it's going to be an exciting season.
Okay, we've seen foreigners and locals returning to the market almost with equal weighting. In the last week, foreigners contributed 49% to the turnover. You say that this rally will be sustained, but just earlier on, when we were talking about the shilling, there are fears of imported inflation, fears of higher fuel costs in Kenya. How's that going to impact on sentiment, especially around the banks, for instance, that have to factor in things like CPI and the bond market?
You are right, actually. But you know what, our equity market behaves sometimes independently of some of the macroeconomic indicators and their movements. I think historically we've seen that in the last quarter, there's always a build-up of activity, particularly on the stock market. If you look at last year, you'll see that between the period of October to December, the index kept going up, as well as the interest rates kept coming down. I think that's going to be a replica. Now, I know that time we had a bit of the CBR was cut by 25 basis points. It may not happen this particular quarter, but I think that momentum is going to be there. Then again, it's true that two different directions, particularly for the shilling on one side and the stock market on the other side. I'm expecting the fixed income market to just be stable, probably as we come towards the end of the year, because again, rebalancing of positions for most funds managers and the banks is going to be happening around this time.
Let's move over to equities and let's talk about those that have been driving the market. Safaricom retained an active stable price of about 4.45 shillings in the last week. What's it going to take to push Safaricom back to the psychological level of 5 shillings, and what's driving the price at the moment?
I think there's a stability level at 4.5. I think if you look at the last 2 weeks, the price has refused to come down there, and a bit of activity actually goes up every time it goes just below 4.5 shillings. I think what's going to take Safaricom to go back to 5 bob? It's a tough question, but I think we're expecting them to give us their half-year results, probably depending how the numbers are, because I know the competition and the revenues are going to be affected in the last 2 months of the quarter. So I think I'll presume the last 4 months are quite okay. I think that's going to be one thing that investors are going to be looking at to see how has it performed. Secondly, I think there's a bit of the competition is trying to slow down now. Most of these mobile telephony companies, they're going back to promotions, probably to try to attract more numbers across that side, as opposed to those price wars we saw just about 2 months ago. And I think investors are watching this one carefully to see how they're going to manage this, particularly as we come to the end of the promotion of their prices, which they never brought them down, but they just reduced them for a period of time. I think investors are looking for that. So you come to the stock market, I think those two factors are going to drive the price, maybe even back up to 5 bob.
All right, we've also been watching Kenya Commercial Bank, which has gained 25 cents. What's driving the stock up, given that they recorded a bit of a shortfall when they were targeting to raise 15 billion shillings in a rights issue? They didn't quite get that.
Thank you. That's behind us right now. It's true that we never got 100%. But look at the current moment right now. I think if you come to the money market, you see the system is very much awash with the liquidity. We are seeing levels of between 18 to 25 billion every day in the overnight. I think banks now overnight is doing just below 1.2%. And I think there's a bit of optimism coming through across the market. I think we are likely to see the credit markets open up, a bit of lending coming up on this quarter. And I think most investors are seeing the value that comes with the regional expansion, probably some of that proceeds from the rights issue that are going to go across the region are going to bolster the performance of the company. So there's a bit of interest coming through from local side as well as the foreign investor for that particular counter. So I think let's watch that space. I'll not be surprised if I'm able to hit 22.5 to 25 shillings within this quarter, the last quarter of the year. Okay,
Fred, talk to us about Equity Bank. The price is flat, but the demand is huge.
Precisely. I think we've just closed the housing finance. And that's one of the corporate bonds that I've done recently. And the official announcement is not yet out yet, but We know that it was fully taken up to the level of a subscription. Again, it contributes to the fact that there's so much liquidity in the system. And I think the receiving bank for that particular offer was Equity Bank. Now, we know every day what happens is most of these banks, when they act that role of receiving bank, and using that cash for their own purposes, but as well as lending. So for most investors, they are seeing an opportunity, like more like what we saw during Safaricom, the IPO, when I think Equity did almost 4 billion in terms of new revenues that came from that particular offer. So I think people are trying to focus and take strategic position for Equity, trying to see whether there's going to be some good tidings coming from this particular offer of HFCK.
Let's talk about the national carrier, Kenya Airways. It's another stock to watch, but they've been plagued by industrial action at the company. But it's been reported that some kind of a settlement was reached between the employer and the employees, but it doesn't seem to have had a very positive impact on how investors view the stock. What's going on?
Thank you very much. I think the case of KQ is very unfortunate because as far as the investors understand, there was a standoff just about a year ago and towards the beginning of the year, and that was resolved. I think the collective bargaining agreement was signed between the management, the COTU, plus the unionizable employees. So we saw a bit of some materials coming in the press towards the weekend about how one party has breached the agreement in that particular CBA. I think it's worth noting that most investors are very careful because at that time, Kenya Airways shared almost 25% of the prices at the time when they had this row when the staff formed the riot. And I think most people are very careful that just in case this thing escalates and it proceeds to another kind of a go slow or some kind of employees going on a strike, then people don't want to be caught up in that particular case where they lost 20%. So I think what we've seen last week and maybe this week going forward, you're going to see most investors trying to take profit, trying to hide their cash in a very safe haven until that particular misunderstanding between the management, the unionizable employees, and court is resolved. And I think it's going to be very important for the management to come out and probably restate where we are and whether the current misunderstanding is going to affect the revenue growth for the company.